Imagine waking up tomorrow and finding out your money is worth less. Your job has been replaced by AI. Your bank just launched a digital currency, and the world's richest 1% got even richer overnight. Sounds shocking, right? Well, it's not the future, it's happening right now. Welcome to the new financial era, where money is changing faster than ever before. In this video, we're going deep into the financial trends reshaping our world in 2024 and 2025. We'll cover everything from digital currencies and collapsing markets to rising opportunities, global inflation, AI-powered jobs, and the investment strategies that can protect your future. Let's get started. For over 100 years, the financial system barely changed. Banks controlled the money, governments printed cash, and people put their savings in fixed deposits, hoping for the best. But now, everything is shifting. Countries like China, the UAE, India, and even Europe are testing something called central bank digital currencies, or CBDCs. These are fully digital currencies controlled by their central banks. No more notes, no more coins, just numbers on a blockchain. While all this technology is advancing, there's a silent thief that's been eating away at our savings: inflation. Over the last few years, inflation has hit nearly every country. Groceries cost more, rent has increased, fuel prices have jumped, and education is more expensive. The problem is, salaries haven't grown at the same speed. This means your money is losing value every single month. But why is inflation rising so fast? It's a combination of global conflicts, supply chain issues, excessive money printing during the pandemic, rising energy prices, and even climate-related costs. The most dangerous part is that people who just keep their money in cash are losing the most. Saving money in a bank account is no longer enough. You have to invest, or you will fall behind. But with great change comes great opportunity. A new generation of millionaires is emerging, and they're not following the old rules. First, there's the crypto boom cycles. Despite being risky, cryptocurrencies continue to create thousands of millionaires during each bull run. Events like the Bitcoin halving and ETF approvals have led to massive price spikes. Then you have AI startups. People working with AI tools, even from their own homes, are earning more than ever before. Jobs like AI automation experts, data trainers, and AI content creators are exploding. This sector is growing faster than any industry in the world. And let's not forget online businesses. Dropshipping, selling digital products, and automated e-commerce systems are now generating full-time incomes for people across the globe. Of course, as new opportunities rise, the old job market is changing fast. AI isn't just helping finance, it's also replacing jobs. Positions like bank clerks, call center staff, data entry operators, accountants, and even some graphic designers are at risk. But on the flip side, new jobs are growing rapidly. We need more AI engineers, cybersecurity experts, financial analysts, app developers, and automation specialists. The safest career today isn't defined by a degree, it's defined by a skill. If you can master a high-demand skill, especially one that works with AI, your future looks very bright. The key is to adapt. Now, let's talk about real estate. In some countries, property prices are absolutely exploding. Think of places like Saudi Arabia, the UAE, Turkey, and India. Why? Rising populations, massive mega projects, foreign investment, and a shortage of housing units are all pushing prices up. But there's a big warning sign here. Interest rates are high, which makes loans very expensive. People are struggling to afford to buy homes. This means in some countries a real estate correction is expected. However, in growing economies like those in the Gulf countries, real estate still remains a very strong investment. So, with all this uncertainty in the markets, where do people put their money to keep it safe? For 5,000 years, the answer has been gold. When markets crash, gold tends to rise. Recently, gold has reached record highs in many countries. Why central banks are buying up gold to protect their currencies? Investors are using it to escape inflation, and with all the uncertain global conditions, the demand for gold is higher than its supply. It still remains one of the safest assets for long-term wealth protection. In 2025, relying on a single job is becoming a thing of the past. The new reality is the side hustle economy. People now have a main job, a side business, a freelance gig, and maybe even an online income stream. This isn't optional anymore. For many, it's a necessity because prices are rising much faster than salaries. Some of the best side hustles right now include selling digital products, dropshipping, online coaching, and offering AI automation services. Running faceless YouTube channels, affiliate marketing, and selling templates or ebooks are also great options. The internet has become the biggest employer in the world, and it's open to everyone. But there's a shadow looming over the global economy. The debt crisis. Countries like the USA, Japan, and the UK are drowning in debt. Why does this matter to you? Because when governments struggle financially, they increase taxes, fuel becomes more expensive, the cost of imported goods goes up, salaries stagnate, and unemployment can rise. Your personal financial condition is directly connected to your country's economy. This is why it's so critical to have multiple income sources, an emergency savings fund, and investments in stable assets. So, how can you protect your money in this new era? Here are some of the smartest strategies recommended by financial experts. First, invest in skills. The best investment you can ever make is in yourself. Learn about AI tools, digital marketing, finance basics, e-commerce, or video editing. Skills create income, income creates wealth, and wealth creates freedom. Second, don't keep all your money in cash. Cash loses value to inflation. A good rule of thumb is to distribute your savings. Maybe 30% in emergency savings, 30% in investments, 20% in learning new skills, and 20% in long-term assets. Third, invest consistently. Even small, regular investments can grow into a fortune over time. And finally, avoid lifestyle inflation and protect yourself from debt.